Okay. Okay, someone say I can hear him. It's quite interesting that this is mixed. Quite a number are saying they can't hear well. Some are also saying they can hear well. But let me just start. If not, if it doesn't improve, I would log out and log back in. So thank you very much, Olanraju, for setting the tone. What PITA is, Personal Income Tax Act. I would try and keep this within the confine of what we'll be discussing around payroll, PITA, and pension. Let me quickly put this caveat out there. Like I would always say, I'm not a master at Excel. I mean Microsoft Excel, because as we start, I might want to share one or two things with you directly from a payroll page. But I just know enough Excel to handle payroll so that somebody is not tempted to reach out to have an Excel session. I'm not a master at it. That's a disclaimer. So our objectives, what we'll be looking at, because we provide participants with required knowledge of managing a payroll process using a Microsoft Excel-driven system. That's supposed to be the technical side to this, but I'm not sure we would have the time to drill into that. A knowledge on relevant government statutes as it applies to payroll, know about relevant government agencies that we'll have to interface with from time to time, understanding of pitfalls to avoid in payroll processing, practical session for running payroll process. Again, we will not be covering that in here. So what are certain myths about payroll? I like to do this. Can you please confirm in the chat room if the volume is good enough now, or we're still struggling? Just type in the chat box. See some charts in here. Loud and clear. I can hear you loud and clear. Better. Okay. Thank you. Thank you. Thank you, everybody. Okay. Can drill further down now. So we'll be looking at some myths about payroll. And I know that a few persons maybe on this call have had to be part of maybe a session with me on payroll. So I'll just be doing a deep dive real quick now. So what are the myths about payroll in the first place? I know there are a number of arguments around who should do payroll, HR, finance, or what have you. But as we go along, we would both decide and agree on where should our box stop. So thank you for the feedbacks. I can hear you clearly and the likes. So what are myths about payroll? There are certain myths that payroll is all about numbers, which is not correct or is not true. There is a bit of payroll that is beyond numbers. We'll touch on that when we are busting the myths. Another myth is that payroll is, you must be mathematically sound to be a good payroll administrator, not necessarily true. Another myth is that payroll is an accounting function. That's not always correct. So what's my opinion in busting those myths? Number one, you have to acknowledge that payroll is an HR function. So number two, you also have to understand that payroll is a combination of numbers and critical thinking. Payroll is a combination of what? Numbers and critical thinking. So we'll go right in now. So what is payroll? When we talk about payroll, and it's as simple as the name implies, roll pay. Like you go for a party and then you have what you call roll call for the party. And interestingly, what does that suggest to you? Anybody wants to share? When you hear roll call for a party, what does it suggest? You can just type in the chat box real quick. I'm waiting. Okay. Somebody said list of people, yeah, taking records, yeah, dignitaries, registered, head count, yeah, that struck a chord. Somebody said calling out list of expected attendees. Very true, very true, very true. Okay, taking cognizance of people, yes, listing number of people in an orderly manner, yes, that word orderly manner too, we have struck a chord. Fantastic, thank you so much. Yeah. So I would just like to pick the word head count. So when you talk about roll call at an event, is assumedly the number of people that were invited to come over for an event. And if you talk about a very structured event, menu is probably based on the roll call. And so mobile branch, you're on your own. You're on your own. If you're not on a roll call, probably have to sort yourself or pet with someone. That was on a lighter note. And so similar applies to payroll. When we talk about payroll is basically the total amount of money that a business pays to employees over a given period of time. And so it's otherwise described as the administration of employees' salaries, wages, bonuses, and all components of employees' gross pay and applicable deduction. So payroll is a financial record of salaries, wages, bonuses, and deductions. And you would agree with me that if you today as an organization, if you're looking to tell actual number of people that are within an organization, one major source document an HR professional has to consult. Your guess is as good as mine. Is your what? What's one major source document that gives you, an almost, not almost, it should be an accurate number of, people in your organization. If you're doing a roll call, head count, how many staff do we have? One major place you go. Okay, somebody says employee database, yes, nominal role or nominal payroll as the case may be. Yeah. But your payroll is one major reference point any day, anytime that probably would give you total list of, and total list of employees within the business. Even if you have consultants that are readily not directly on your payroll, I would assume that you have a different spreadsheet where you capture them, so that your payroll gives you like an accurate figure of number of people within the business. And even if you have volunteers that you probably pay stipends to, they are supposed to be captured somewhere in your spreadsheet. Now, so let's look at some quick payroll terminologies, right? Number one, I said payroll, amount of money paid to all employees on company's roll call at a given period. And so we know that there are certain statutory deductions that we do, your ITF, your NSITF, 1% of your total payroll, blah, 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 and what have you. And so that's what your payroll seemingly represents for you as an organization. Okay. So then we move to what's your gross pay. Your gross pay is the total amount you pay to an employee per pay period. So I need us to note that word pay period, and I would explain as we go along why it's important for us to note pay period. I've worked in an organization where salaries were paid twice in a month. So that's a bi-weekly pay period. So I'm sure that people have worked in similar organizations, probably on the platform, or somebody who has worked in similar organization. So before statutory deduction, so your gross pay is determined in different ways for salaried and hourly employees. And so please know that it's important that gross pay comparison to determine how much people actually earn at the end of the day might not be good enough as a benchmark. And so I would explain what I mean. When we get into the body of this, we'll be talking about tax management, tax evasion. Yes, thank you, Esther. Esther said yes, she's working in a place like that. So tax evasion, tax management, and the like. So probably would have the time to get into that. So gross pay is not always a true reflection of people's final take home, because there are a number of factors that influences what your net pay comes to, depending on the compensation philosophy of the organization, how your pay is also structured. Yeah, first pay is 60, second pay is 40. Yeah, and a lot of times behind those compensation structure, design, and what have you, many a times for most organizations is actually born out of the need for tax management. But again, like I said, we'll get into that as we go along. And then your net pay is the amount of pay an employee receives after all withholding and deductions from gross pay has been made. As a matter of rule, personally, I don't negotiate on gross when I'm discussing offer. So I'm not really interested in what because I don't know what your tax system is. Yes, there is a personal income tax act that stipulates what percentage of salaries have to be deducted at what point and what have you. But really and truly, we all know that, say, at the end of the day, if you tell me to do 7% of an amount, I can choose to split the amount into 2 or 3 different components and choose how I treat the other 2 components. So again, you understand what we mean by tax management, but we'll come into that so that I don't jump the gun. Please confirm that you can still hear me by typing yes.
Yes, we can.
Okay, great. Thank you, Chima. I see you. Thank you for the responses. So far, for those of us who have been in the traffic, what color represents the kind of traffic you experience? If you ask me, I'll tell you black. Like I am drained. So I'd rather put it black. Interestingly, I seemingly have had like a sort of this is going to be like a third engagement today. Dr. Oluwakemi says red. You're being fair. Mine is, I mean, very dark black. Thank you to say. I think I pick your color. Very dark black. Yeah. So feel free to drop what color today represent or looks like to you. Interesting. Yeah. So move to the next slide. Other key payroll terminologies, we talk about withholding, and what do we mean by refers to amount taken from an employee's paycheck for applicable income tax in line with approved tax rate. So we'll talk about the 9 different types of tax that there are as we go along, and then we'll have overtime too. So I like to always share the philosophy behind some of these things. Overtime in itself originally came from the concept of manufacturing, on the basis of, very junior staff who were most times hourly employees and were not earning much. And so the concept of overtime was majorly to cater for junior staff who were not well earning, such that for those who were working extra hours, they could get a bit more. Esther says black. Yes. Tony says blue, black. Oh, you're still on the road, 3 hours. Interesting. I have to just park. Sorry, Tony, I wish I could come and be your driver anyways. You know, I'll do that for you. So overtime is the additional amount paid to hourly employees who work over 40 hours in a week. And that's why for those of us who are probably in tandem with the NIC judgments of recent times, you realize that there are NIC rulings that says it is illegal to pay a periodic employee prorated salary, irrespective of when they joined or irrespective of when they're leaving your organization. It's hinged on the back of some of these things, right? So when somebody joins you, you do not, as long as they are not hourly employees, right? You are not supposed to prorate their salary, whether they join at a particular period of the month or they are leaving your organization before the end of the month. They are deserving of a full month's pay. So this is part of where, and then you know that there are some international ILO conventions that actually support that. And interestingly for us as a nation, we are member of the ILO. So salary staff are normally exempted from overtime though, subject to company's policy or employees' contract of engagement. Please note that caveat. It's not there is no hard and fast rule about it, right? But ideally, that's why I shared a background to where the concept of overtime came from. It was basically to support junior staff who were low earning. And so, but again, if your contract makes provision for the same, oh wow, that's a good one. Yeah, so we'll move to the next slide. Pay period. So a pay period is a recurring length of time over which employee pay is recorded and paid. So some common pay periods that quite a number of us are familiar with, we have monthly pay period, we have weekly. Thank God at least I had an Esther Ribi who also testified to the fact that she's worked in a place like that. We have bi-weekly and we have semi-monthly. So please, bi-weekly and semi-monthly are not totally the same thing, so that we don't get that twisted. Bi-weekly means every other week. And so it means that for a week that has maybe for a month that has 5 weeks, you might get paid 3 times in a month. That's the difference between bi-weekly and semi-monthly. Semi-monthly is cast in stone. It means that you'll be paid at this particular period in the month and then this other particular period in the month. Why bi-weekly suggests that every other week. So you could have situation where people are paid 3 times in a month. Now, a weekly pay period results in 52 pay periods in a year. We all know that we have 52 weeks in one calendar year. Why a bi-weekly pay period results in 26 pay periods in a year. Semi-monthly pay results in 24 pay periods in a year. And so these are the understanding of the concepts that has brought about the argument around. Okay, Esther says 25th of every month. Yeah, so that's a monthly pay period. Thank you, Esther, for your engagement. So these are the understanding that inform the argument around why 13th month should actually be a standard pay, as opposed to companies' philosophy driven. If I am not mistaken, I'm not sure. 13th month, I don't think there's a provision for it in the law. That's why it's subject to organization's policy. But for those who are pro 13th month, for it to be standard, these are the rationale behind it. Thank you, Larry. 28 in my office. Mine is 26, right? But please don't calculate my pay period for me. So the difference is important in computing total pay for employees per year. So for the advocates of 13th month, you understand that in the real sense of it, when you're paid monthly, there are certain weeks that are outstanding that looks like you are being shortchanged for. But please, I don't want to dwell too much on that. I believe that we all work in organizations where we end 13th month. For your information, they pay 14th month in Italy. So you might be considering relocation. Think about it. Oh, okay. So I'll move to other ones. Employee compensation. Employee compensation is a term that is often used. Okay, Toluwani's hand is raised. Okay, please feel free, Toluwani, you have the floor.
Can I go ahead?
Yes, please.
Okay, I don't really get what you meant in the proration for the 13th month. What do you mean?
Okay, I'll go back to the previous slide. I said, for those who are pro 13th month, the argument is that now if
only buy just furniture.
You said what? Can you hear me?
Please go ahead.
Yeah, I
Someone
can
was
hear you. Yeah.
So
It was a mistake. Well, you can go on.
If you pay people monthly, that you would have paid them 12 times in a year. If you pay people semi-monthly, that's twice in a month, you would have still paid people for 24 pay periods. However, the argument is that in the real sense of it, are you not shortchanging people if you pay them 24 pay period? Because really, if you're going by weeks, if you're saying you have 12 months in a year and you have assumed 4 weeks in a month, that's 48 weeks, right? 4 times 12. Are you with me, Toluwani? So that's
Yes, I am.
Yeah, that's 48 weeks. So what happens to the remaining 4 weeks that makes the actual 52 weeks in a year? So that's the idea behind or the argument behind there is actually a need for a 13th month.
But if you are to pay the 13th month,
Yes.
would the deduction, the tax and all of that, will it be part of it?
Absolutely. Absolutely. 13th month is taxable, so it's subject to, you tax it.
Okay. Thank you very much.
It's bad enough that even bonuses are taxable now. Gone are the days where are you aware that Lagos state government is in court to start taxing gratuities? So that's how far or how much government is keen on all of this. Yeah. So let's move on. Thank you so much, my Oga. Alan Raju said to keep questions till later. So please, you can write down your questions. Well, thank you for that, everyone. because we might not be able to have come back to this. Now, other payroll terminologies, employee compensation is a term that is often used instead of the term pay, right? As it comprises of other benefits. So for those of us who are familiar with the concept of total rewards, this is seemingly close to total rewards. So not just your pay, but even your benefits, monetizing your benefits. So someone says, oh, I earn 15,000 naira per month, but the organization buys you airtime worth 3,000 naira. Your gross pay is 15,000, but if you're looking at your total compensation, right? So you have to put a monetary value to even the airtime that the organization puts on your phone, to the data the organization puts on your phone. So that gives you the idea of the concept of your compensation. So it comprises of both your benefit, your cash, your pay and your benefits, both cash and non-cash benefit, basically. So group life insurance, for example, is cost to company, and all of those are supposed to form your compensation as your total compensation, your health insurance, communication allowance, blah 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 blah, and all of that. And so we move to another terminology, which is salary. Yeah, thank you, IG. It says cost to company. Yeah. So, okay, there's a Christina. Thank you, PENCOM, for you're already even answering some of these questions. Thank you, God bless you. Yeah, you promised and you're doing so. Thank you, Raju. Salaried and hourly employees. Now, the term salaried employee and hourly employee relates specifically to how these employees are paid, right? And salaried employees are paid an annual salary. Hourly employees are paid an hourly rate times hours worked. So salaried employees have a more guaranteed pay structure than hourly employees. And that's why you bear me witness that even in your organization, for the days where you have an employee who called in sick, or who for one reason took a day off for work, from maybe casual leave or what have you, at the end of the month, you still pay them their salaries in full, right? Yeah, so because they are not hourly employees. And the whole concept of hourly employee was really big in the days of the Industrial Revolution and what have you, when manufacturing was at the fore, when we're in the manufacturing age and what have you. So that's where you have factory workers who have to use time and attendance sheets, right, to clock in, and then how many hours they've worked. You have a supervisor who is checking and ticking, because their salary is paid based on their hourly charge, right? And so there are still organizations who do the same, even for non-blue collar roles. Yeah, I know that even in my organization, we have a number of clients who pay based on what we call billable hours. So how many hours did you spend on? You must be able to put hours to the time you spent on a brief, on a job, and what have you. Okay, we'll move. Now, there are different types of payroll, but I think it's important that you know this for knowledge sake, but really and truly, they are all just variants of similar payroll. So you have your regular payroll, which is your normally scheduled payroll, depending on your policy on when you do payroll and when you turn the same over. You have the supplemental payroll. So there are times where, for example, I used to work in an organization where in March, bonuses are being paid for an outgone financial year. So for those periods, you have what you now call your supplemental payroll, where it's sort of an additional payroll to your regular payroll, either to treat things like commission, your bonuses, or what have you. And a lot of times those things are done off your regular payroll for some obvious reasons, maybe to manage tax, and what have you. You have your reversal payroll. It's the payroll that voids another payroll, which is used to correct a wrong payroll run. So in my early days of consulting, I remember that we used to work for a few MNCs that had presence in Nigeria. And so there are times where you probably have done a payroll run, and then at the point of the client paying salaries, they realize that, oh, there's a major error on the payroll. So what would normally happen is to send you to ask you to rerun the payroll. This is sort of a reversal, whatever error happened on your side. And then you have the fourth one, which is client correction payroll. So it's sort of a reversal payroll, but this time around, it normally does happen if the fault is from the client side, and then so it's not necessarily because your own payroll was wrong, but at times clients have new change requests or they're trying to maybe overturn something. I remember that I did one sometimes while still in consulting. And that was the period where, if you remember the Pension Reform Act of 2014, for those of us who probably were doing payroll at that point. So you remember that act, there was a bit of ambiguity in that act that was defining, so it talked about pension deduction coming on total emolument. And the definition of total emolument became contentious. I don't know how many of us can remember when that PRA 2014 was gazetted and it came into law. Oh, thank you. Yeah. Oh, Emo, your Majesty, sir. Yeah, it was very contentious, and I remember that year we processed payroll. So because the client is one client that they were big on compliance, and that was, I mean, that was General Electric. They're very big on compliance. So we had run the payroll on what was it called, on total emolument. That's total salary, no longer BHT. And we ran it for about 3 months. I think it was about the 4th month that they realized that everybody has just stuck and stayed on BHT anyways. And so we had to, and then I think at a point, the Minister of Labor and Productivity also, there was a lot around just coming to provide a bit more clarity. And then I think an addendum came with the what's it called? With the rule. Sorry, just a second. Okay, yeah, so sorry. So what are basic obligations of employers across board for all as HR professionals, payroll obligations and requirements? So you talk about annual leave. So every employee is entitled to paid annual leave days based on company's leave policy or as agreed in contract of employment. So an employee would not go on 2 weeks leave, for example. Is a paid leave. So you can't treat it as a period of absence. You cannot prorate their salary, right? So, and that's why even though the individual was at work for 15 days in 1 month, you're paying them their full salary because you're mandated by law. I think the minimum is five working days or so by law, 6 working days. Our labor law now. Thank God for CIPM. I think there are some push from certain quarters to things that are beginning to. I think there's a review ongoing. And then medical insurance. This was argued. I've been at different forum where this was being argued. Employees are mandated under the NHIS law to provide health insurance cover for their employees. So don't get it wrong. It is to provide health insurance cover. And then the NHIS Act, I think it used to be a scheme before. It's no longer a scheme because I think it's NHI, National Health Insurance. I can't even remember, but it was recently reenacted. And so the act is clear. So what it demands of you is there's supposed to be a 10% contribution from employer and 5% contribution from employee. It is mandatory, but it is not mandatory for employer to bear the total cost. It's a shared cost. So I know I've been with a number of HR professionals saying, oh, HMO is compulsory. In fact, with the new act governing NHIS now, whether you do HMO or not, mandatorily, you are actually, yes, NHIA, mandatorily, you're actually supposed to sign up for National Health Insurance Act, the National Health Insurance, basically, which is now governed by an act, which makes it a regulatory body now. It makes it mandatory. So HMO is supposed to be an add-on for anybody now. Group life assurance, although that's still not being enforced, group life assurance, this is covered in the Pension Reform Act of 2014, mandating all employers to insure all employees to 3 times of their annual emoluments in the event of death, disappearance, or permanent disability. There is a bit of what's it called now? There's a bit of yes, thank you, Temitope, National Health Insurance Authority, yes, which is now the one, the regulatory body for enforcing the act, the National Health Insurance Act. Okay, so I think that there's a bit of a line of the intersection between the group life and your NHIS. I guess we would get in. Sorry, NSITF I meant. Yeah. So you know that NSITF is big on more the work disability or hazard during hazard in the workplace, and you know that was what replaced your Employee Compensation Act, ECA. So, but we'll touch on a bit of all of that as we go on. Okay, what was the contribution on percentage on health insurance? Yes, for NHIA, sorry, 5% employee, 10% employer. What are the other obligations? Pension, like I said, pension is mandatory, it's statutory by law. And so you're supposed to contribute 10% of BAT, while employee contributes 8%. And you know, it's quite interesting. Payroll is I mean, actually the Pension Reform Act is a bit funny. So it will interest you to know that if, as an employer, you choose to take on the contribution of the employer and employer, you're actually supposed to contribute 20%. So at times I used to think maybe somebody was sleeping while they were writing something. Right. So NSITF, although it's not captured on the payroll, it is a cost to company. As a social insurance, employers are mandated by law to provide for employee, and 1% of your total payroll, like I mentioned, that was what replaced your Employee Compensation Act, National Social Insurance Trust Fund. So you have what you also call, we're still looking at terminologies. You have what you call your pay slip. Your pay slip is a small document included with an employee's wage or salary, giving details of money in, applicable deductions and insurance paid. I've been in forum and I've heard people say, oh, is pay slip mandatory, is pay slip whatever, and what have you, blah, 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 and the likes. And what I say to people is this: when you understand the rationale behind, and as HR professionals, it's always important that we understand the philosophy behind concepts, beyond trying to just adopt templates or and what have you. What's the philosophy behind payslip? What informed payslip? When you were hiring me, you said you were going to pay me 200 naira, right? At the end of the month, I got 185. The 15 naira difference is what the payslip is meant to explain. And it's as simple as that. So I'm trying to bring it down. I mean, so that you can, a lot of times, you know, we get so caught in the midst of these jargons that we don't even really understand what we're doing or why payslip. So, and when people say, oh, payslip, oh, we don't give payslip here, confidential, I do not understand. So your payslip is to save me the stress of having to explain why the 200 naira I promised you at the interview was not paid. And so Christina says, can somebody please just help me note these questions so that we can move real quick, because I hope to, so yeah, probably wrap up in about 30 minutes. Okay, so there's a question that says, thank you, Temitope, for transparency purpose. Absolutely. I can't agree more. So somebody said, is pay slip supposed to be given before or after pay? How do I know? How do I contest why you're not paying me 200 if I have not gotten 185, right? So if there are even other deduction, basically, it is my pay slip that should tell me why my 185 in month one has become 183 in month two. So do I have an additional loan? Probably I took a loan from the company or what have you and the likes. So, okay. So let me move. But so far, please drop in the chat box. Is it been worth our time at all? I'm waiting for responses. I know for some people it's probably a refresher. Okay, thank you, Christiana. Thank you, Lillian. Yeah, thank you, Remide. Okay. So we'll look at the role of, oh yeah, thank you. So I will sample of the payslip. Yeah, no. Thank you. My people, seeing quite a number of us here. Interesting. Thank you, Stella, Deji, Patricia. Thank you, everybody. Role of HR in payroll administration. Somebody asked for payslip templates. It is well. After now, we'll discuss. So creation of new hires data on the payroll and removal of exited staff. These are some of the functions, but please, the list is not exhaustive. Creation of new hires data on the payroll and removal of exited staff. Those are part of HR's function in payroll administration. Processing of the payroll itself. Ensure pay date is sacrosanct. I've shared before, I've worked in an organization where even as an HR officer, I was privy to issue queries to the head of finance when salaries do not go on the agreed date. And the organizations that actually have those policies captured in the staff handbook due date for salary payment. So every time that your head of finance does not pay on those dates is a breach. But a lot of times, of course, we just feel they will pay it. We need to begin to get to that point where we are holding one another accountable, even as an institution, right? So it's not being difficult. Pay date should be sacrosanct. People make commitments based on pay date. And so if it's not going to happen, it is important that the business respects people's commitment on the back of a contract that they have signed. I mean, it is that serious. But please don't go and make trouble on Tuesday with your finance. Anyways, ensure compliance with relevant laws. That's the responsibility of HR and payroll administration. Review of timesheets, depending on where you work, what business you support, and the nature of your business and what sector you work hard. Keep track of attendance and leave management. So people at times have gone on unpaid leave days. All of those things are supposed to inform the kind of operations that need to come on payroll on a monthly basis. Well, what are the roles of accounts? Again, this list is also not exhaustive. What are roles of accounts in payroll administration? When I was in consulting, plus what the roles of accountant and what we're doing as HR consultants. So again, like I said, my bias is that payroll should sit with HR. There is nothing. The only time where you interface with finances maybe when you need to make make payment of salaries. And that's why you see on my list, that's the first thing that I tag as the role of accounting payroll administration, payment of salaries, right? Because again, that sits with finance for obvious reasons. Processing payroll where it applies. I've worked in organizations where end-to-end of payroll sits with finance. Remittance of tax and other deductions, yes, finance handles that. And then provision of pay slips. Okay, we're entering into the crux. So statutory regulations, withholding taxes and deductions. Sorry, can we still see my screen?
Yes.
Yes.
Please, what can you see on my screen? Okay. Fantastic. Okay, we're on the same page. So, withholding taxes and deductions, remitting pay in line with government legislation. So, the Nigerian tax law, or what you call your PITA, that's Personal Income Tax Act, right, requires that employees. Okay, Ingozika, Akos, and is up. Ingozika, please, you have the floor.
No, I just responded. Good evening. I just responded to the fact that I could see your screen. Okay.
Okay, Christiana Shupekon, your hand raised. Or is it?
Good evening.
Okay.
Thank you.
Oh, okay. So remitting pay in line with government legislation. We all know that we have a tax bracket for which we use to calculate our payroll, and it is the highest tax rate is 24%, and the lowest is 7%. Before the very recent what's it called now? Was it the Omnibus Act? No, there was one recent act. So where before now we used to have what you call your minimum tax, which is 1% for those earning minimum wage and below. But now we know that from the new Finance Act of 2020, not the Omnibus Act, from the new Finance Act of 2020. So we know that anybody on minimum wage and below is tax exempt. Yeah. And we all understand the implication of the new Finance Act. I don't know how many of us, when it was implemented, if you had employees who came around to say, my net fee has reduced by another 800 naira or 15, or depending on how much they earn. I don't know if you witness such. I'm going to be sharing with us what actually I hope the time will permit me, and then chance will permit me to share a payroll spreadsheet with us. Built from scratch on Excel. So you will see what it means to say what was the implication and the impact of the new Finance Act of 2020. Why you have employees come around and say, hey, what everything go right? Where you're seeing a reduction of 1,000 to 1,005, 2,000, 3,000, depending on how much you earn, which was on the premise of the new Finance Act. Christiana say, please do share the payroll spreadsheet. You need to go and collect permission from my orga. Talk to my logo. So annual income of first 300,000 is on 7%, next 300,000 on 11%, next 500 on 15%, next 500 on 19%, next 1.6 on 21, and then over 3.2 on 24%. Yes. Moralake says below 300,000 is tax exempt, but must be filed during annual returns filing. Absolutely. The same way, even for organizations, even if you are not earning, there's what we call null tax, null filing, or what's it called? Yeah. So even if you're not making profit. So what's the role of the FIRS and the SIRS in all of this? Now, the Federal Inland Revenue Service, Emo, please grant permission. Okay, Taiwo, what do you want me to spend time to explain more? The null returns. Thank you, Moralake. Yeah. So the role of the FIRS and the SIRS, if you look at the image here, you see what I put there as tax. There's a scissors there. That's the whole idea behind it. Oh, okay, Taiwo, no, not a problem. If time permits me to share the Excel, that's the spreadsheet, you would understand it a bit more practically than if I'm talking through it. So you see the tax, you see the scissors, and that's the whole concept behind tax, is to say whatever it is that you're earning, government is taking a portion of it off. Thank you, RBC, for the feedback. Thank you. So the Federal Inland Revenue Service is responsible for tax collection from Abuja residents military personnel, foreign affairs officials, that's diplomats, basically, withholding tax and company income tax. However, I think some 2-3 years ago, we now have what we call Abuja Inland Revenue Service, who has now taken on the responsibility of collecting tax from Abuja residents, and that's been taken off the FIRS. While the State Inland Revenue Service is responsible for collecting PE, WHT for individuals only, not for organizations, development levy, registration of business premises. I don't know how many organizations still do it, but do you know that development levy it's been 100 naira for a while. I don't know if it has increased. You're supposed to be paying 100 naira on each of your head counts or each of your employees, which is actually supposed to be on your payroll. It's still 100 naira. Okay. Morola, you're my learner colleague. You are so abreast of this payroll thing. Yeah, Abuja now has IRS, Abuja Inland Revenue Service. Oops. Okay, I need to run through this. My laptop battery is low and it just signaled me. And please remember that I said I am on the road. So let me just run through this so that we're able to at least push this to a reasonable point. So, and then registration of business premises, I think that's supposed to be paid once a year. It's 5,000 naira for some businesses and then 10,000 naira for some other businesses. So it surprised you to know the 100 naira business development levy. Quite a number of us, you prepare payroll, you don't even know that this development levy is actually mandatory. But unfortunately, the big deal for them is the big money, which is your payee. Now, what's consolidated relief allowance? So when government came with scissors to take that which belongs to us, I mean to take a portion of what belongs to us. In hindsight, I thought about it, say, okay, let us leave these guys with something little. Let us not put a tax on all that they are earning. Let us make room. And that's where the concept of consolidated relief allowance came to play. And your CRA is higher 1% of gross income or 200,000. Some of these things might be a bit over your head if you're not doing payroll, except you see them on spreadsheets, and we will walk through it together. But again, just for knowledge sake, and then you can relate to it better next time you come across it. So consolidated relief allowance is the higher 1% of gross income or 200,000. There is a formula that drives this, plus an additional 20% of your gross income. So depending on which is bigger. Oh, my screen is still on the tax table slide. Interesting. Let me see what. How about now? Are we on the consolidated release slide? Okay, thank you for noting that. I was wondering. Okay, so the CRA is higher 1% of gross income of 200,000, depending on which is higher. So if your gross income is say 1 million naira, for example, 1% of 1 million would be 100,000, if I'm not mistaken. That is 100,000. 10% is 100,000. 1% is 10,000. So it means that in calculating CRA, you will rather use 200,000 as opposed to 1% of the gross income, right? So that's the idea. And as the name implies, it is designed to reduce your tax burden of individuals to the government. However, based on the newly gazetted Finance Act of 2020, now for payroll administrators, you relate to what I'm saying a bit more now. You know that on your payroll now, there are two types of gross income. There is your gross income as to gross pay. Then there is your gross income for your calculating your consolidated relief allowance, which is less your relief item. And that's why employees come to you now to complain that, this thing, net pay is reducing again slightly. So the whole idea is that what if you used to enjoy consolidated relief on 100,000, Government is saying by the time you take out your relief item, maybe your pension contribution and what have you, net it, take it out of the gross income. So if all of those comes to maybe a 10,000 out of 100,000, so it's saying that your gross income for consolidated relief allowance is now 90,000. So it means that you are enjoying relief on 10,000 less of your actual gross pay, which is what has impacted. So if you're enjoying relief on 100,000 before, you know that your earnings will be at least the relief on your tax relief will be a bit higher. Now, government is saying even though you are earning 100,000 with the newly gazetted Finance Act of 2020, even though you are earning 100,000, you will no longer enjoy relief on the whole 100,000. You will now enjoy consolidated relief on 90,000, which is what contributed or what informs the slight increase again in people's the slight decrease in net pay vis-a-vis increase in employees tax. But the difference is not very material. As I said, you know, people's salary, depending on how much people are earning, you realize that their net pay is reducing by maybe 800 naira, a 1.2, a 2.5, and so basically that's what brought about that in recent past. And it forms part of the tax exempt items recognized by personal income tax law alongside the following: your national housing fund contribution. We all know now that NHF, at least for private organization, is no longer mandatory, right? But if you want to continue to do it, bear in mind that it's going to impact on people's net pay significantly. And when I say significantly, I mean materially. And reason being that before now, your NHF is 2.5% of basic salary. Now, if you want to continue continue with the contribution, you are now going to be doing 2.5% of employees' gross pay, which is going to impact salaries. Impact their net pay materially. So think about it before you do. And if you ask for my opinion, and this is my opinion, what I always tell people is this: okay, the 1,500 naira that was deducted from my salary some 5-10 years ago, right? Thank you, you actually took that from my mouth. The 1,500 that was deducted from my salary some 10 years ago in the name of NHF, that same amount as of today is probably less than a 750 naira in terms of value because of inflation rate. For pension, for example, I can still relate that, okay, at least there are some kind of investment that these PFAs do, right? And that's why you realize that you get returns, you contribute and your money goes up and things like that. So, but for NHF, it just doesn't add up for me. So why am I putting my money in a fund that the money is losing value every passing day? So ask me what's my recommendation to my organization is to please opt out with immediate effect. Anyways, there's a lot more on NHF that firsthand that I probably do know, but it might not be for this forum. So, and you have your National Health Insurance Scheme, or again, it's called National Health Insurance Act now. It's no longer just a scheme. Yeah, your life insurance and then your pension, all of these forms your relief. The Senate says, thank God it's voluntary, I know. So requirements, the tax deduction is to be paid into approved collecting banks, of which SRS or FRS will the following. So your monthly remittance, which should basically come with your teller of deposited amounts, then attach it with your schedule of employees on payroll at any given time. And some of these states, a lot of these states have their leasing offices in Lagos. A lot of them are actually Bishop Oluwole, Karim Kokson, that's for Delta State. Bishop Oluwole houses a lot of them. Kogi, I think Rivers, Edo, quite a number of these state leasing offices are there, and you will need them more You will need them more. It's always important that on a monthly basis, you actually go and process your receipts and not wait till the end of the year when you're planning to file your annual returns. The pressure is always intense, right? And then, so annual filing, you need the receipt of payments, you fill your Form G, Form H1, and then I think Form A, and what have you, with all the receipts of your tax payment across a 12-month calendar year, and then schedule of employees within the year. And I always advise this. So you probably might not, based on experience in payroll administration, when you have employees leave your organization, it's always good to write a tax agency that oversees you, that you are under. Reason being that for every given year, they have done a projection on how much they're expecting from you in a coming year, based on what you came into the new year with. And so when you have employees leave, and before you replace them, most likely it might take you one month window or 2 months to even do a replacement. It's always good that you notify the tax body by writing to them that for this month you've had a drop in one employee. It helps to manage the expectation. It helps to manage what tax return they expect from you for that particular month. So whatever difference or reduction in your tax remittance for that month, there is already a basis for it. So the tax body is not thinking, because the last thing you want them is to declare a tax audit. It's always difficult, no matter how much you try to comply. They always find, I don't know, maybe things have changed now, Sean. So now we'll talk about tax evasion and tax avoidance and their implications. So tax avoidance is actually a deliberate legal act of the taxpayer not to pay tax at all, right? And it's a common knowledge that tax avoidance, however legal, is tax dodging, and it is antisocial, unpatriotic for nations that actually utilize tax for public infrastructure. Now, tax exemption is when one is not due. Is an example of tax avoidance. Sorry. Okay, somebody said, would the letter be addressed to LIRS or tax consultant? It should be addressed to LIRS. However, you can copy your tax consultant. Yeah. So tax evasion on its own part is a legal act. Tax avoidance, like I said, is a deliberate legal act of a taxpayer not to pay tax at all. But tax evasion on its part is a legal act which achieves the same goal as tax avoidance, but the method is different. What we call tax avoidance is what some people call tax management. So you work in organizations, your salary is broken down into two. One part, let's say, is reimbursement for where you did not go, for trips you did not make, for travels you didn't do, for payments you never, for costs you never incurred, right? And so all of those philosophies are basically to manage tax or for tax avoidance, such that your tax is not heavy. Tax is paid on a minimum amount of or portion of your salary. So while tax evasion is an illegal method of reducing one's income or non-declaration of accurate income by individuals or firms for the purpose of taxation. So tax avoidance is basically dodging, tax evasion is jumping. So, and really and truly, this has become an issue of great concern in Nigerian tax system, and even in the international scene. You listen to news, you hear people being chased for tax of maybe like 10 years ago and all of that, to tell you that really it's a big deal. And also bear in mind that tax is actually a major revenue generation means for government. Now, the question that has been begging an answer is what is responsible for the continued existence of tax evasion and tax avoidance? But I don't think for us it begs for an answer. We all know the answer, but again, it won't be my place. So, so what are the far-reaching consequences of tax evasion and tax avoidance? You have negative impact on the nation's economy, ideally, decline in fiscal revenue of the country, especially at state level, and an adverse effect on the allocation of resources, because when resources are limited, there's just so much that can be allocated, if they are truly allocated though. Yeah. So the Nigerian tax system makes provision for 9 types of tax, and they are highlighted below. I won't dwell much on it, but like I said, I will try and wrap up the session in another 5-10 minutes. Yeah. So we have the company's income tax, you have the petroleum profit tax, you have the value added tax, you have the personal income tax, which is what concerns us more for payroll. We have the withholding tax, which also still concerns us for those of us that have consultants and the likes. You have your educational tax, stamp duties, and then capital gains tax. Some of these taxes are industry specific, like capital gains tax has to do with real estate sector largely. Your education tax, I think it has to do with the oil in the oil sector, oil and gas. Same thing with the PPT, petroleum profit tax. Now, your pay as you earn, which concerns us much, like I said, is a tax mechanism by which your personal income tax on salaries paid to employees is deducted by employer at source, that's before payment, and remitted to the FIRS, or sorry, I mean, that's a typo, the SIRSs, the different state internal revenue services. While your withholding tax could either be individual or corporate bodies expected to deduct on their taxable income from payment by other individuals or corporate bodies. And these deductions are expected to be remitted within 30 days. While non-resident companies are not exempt from the WAT. So we have what we call significant economic presence company, that SCP, which provision is made for in the tax law. You and I know are people who, even if you're an expatriate, except if you stay in the country beyond 183 days out of 365 in a year, you're expected to actually tax, you're liable to pay tax, right? However, if you pay tax in your country, there are provisions. I think there are certain treaties that Nigeria is part of, where you can claim the incidence of double taxation, and so you can be exempted. But all of those things, you know, there are a lot of process. I mean, there is a lot of processes that go into it. So for companies that have significant economic presence, they are also expected to pay tax, even if they don't have a physical presence in the country. Okay. Yeah, brought into our hand from the double taxation treaty. Thank you, Morolaka. Yeah. So we also have the company's income tax, which may be referred to as corporate tax or business tax. And then it's taxable by any company resident in Nigeria based on their worldwide income. And for companies that are non-resident in Nigeria, the CIT must be paid on all incomes from Nigerian sources. So the corporate income tax is 30% of all profits accrued by a company during the year under assessment. That's for a financial year. And there can be decreases in the rates for low-income companies and other categories. We would not dwell so much on this. So we have your petroleum profit tax. I won't bore you with so much of this. You might not totally need them, except when it's a proper payroll class, and even for that. And then you have your value added tax, which used to be 5%, but now scaled up to 7.5%. You have your education trust fund tax, which is supposed to be 2% separate from your CIT, deducted from profits of every resident company, which is geared towards improving the quality of education. Non-resident companies are exempt from this tax, right? Not tax, I mean tax. So, but again, I don't know where these taxes go to. Nobody is accounting for what. And your capital gains tax has to do with proceeds from sale of assets and properties, or whether they are regardless of whether they are located in Nigeria or not. Then you have your personal income tax, which is the tax deducted from the income of Nigerian residents through the payee mechanism previously discussed. So This tax ranges from 7% on the first 300,000 to 24% for people earning higher than 3.2 million. And it is important to know that workers living in Nigeria for greater than 6 months are considered tax residents. So for people who stay less than 6 months in the country, they are actually they are tax exempt, right? But if you do anything 6 months and above or 183 days, you are expected. Also, as foreigners in possession of Nigerian residence permits, they are considered as tax residents too. Okay. So your pension. What is pension under the new Pension Reform Act of 2014? Is a regular payment that is made during a person's retirement from an investment fund on account to which that person or their employers contributed during their time as an active member of the labor force. And so we all know that pension has replaced gratuities or terminal benefits, right, based on the provision of the new act. It is therefore important as a payroll administrator to ensure both strict compliance to deduction and contribution from employee and employer respectively, whilst also ensuring that due remittances are made. For your information, pension remittance is supposed to be done 7 days after pay has been made, after your payroll has been completed and salaries have been paid. And your pay should be done, I think, on the 10th day of every month after salaries have been paid. These things actually have penalties attached to them, but interestingly, again, maybe it's flaws on the part of some of these regulatory agencies who probably let them slide. But you also don't want to be caught on the side, the hearing side. So I always strongly advise that as HR professionals, let us be that force to admonish our organizations to do the needful and to be compliant. It's cheaper to be compliant, to be honest with you, and that's what I tell people. It's cheaper because in the long run, if you ever had to experience a compliance issue, you would know that it was actually cheaper in the real sense to be compliant, as opposed to trying to, cut corners. So there are two types of pension. You have your mandatory pension contribution, which we're all familiar with, which is your 8% employee and 10% employer, which is made into the retirement savings account of the employee on a monthly basis. And then for your information, so if you have employees who don't have an RSA, ideally you can actually make remittance for them. There's what the PFAs call a suspense account. Pending when the account is being opened. If you decide, if you have a pension fund administrator that you probably subscribe with, or you think, I don't know, if the individual has chosen a PFA, and yet they are, for one reason or the other, we know with the whole ININ thing, it's been dramatic, opening RSA account for some individuals and all of that. So, but you can always have a suspense account where some of these things are held in trust until the individual opens their RSA account. And then you have your additional voluntary pension contribution. I would just say something on a lighter note on this. So before now, your ABC used to be a shortcut to also do what you call tax management. So when this newly came out, because it is non-taxable, when it newly came out, right, people contributed to ABC, and the following month they will go and draw down on it to circumvent tax. However, after a while, when as usual, when government found out on all of this, there was a reenactment that now says it became mandatory that if you're contributing to your voluntary pension contribution, it would only be tax deductible. That is, it will be tax free if you don't make withdrawal earlier than 5 years after your first contribution. So if you want to draw from your voluntary pension contribution within the space of 6 months, it is taxable. Before now, it was non-taxable, right? But again, government would always take a step higher to ensure that people do not circumvent or shortchange the system. So people were using it to bring down their tax liability. But again, that's no longer so practicable. Now, what is stakeholders in payroll administration? You have your employee who is the beneficiary of the scheme. Sorry, your key stakeholders in your pension thing. So you have the employee who is a key beneficiary of the scheme, and who has the right to choose whatever PFA the employer should remit their pension to as a retirement saving. You have the employer, that's the organization saddled with the responsibility of making pension contribution on behalf of our employee. You have the pension fund administrator. Now, your PFC, pension fund custodian, is different from your pension fund administrator. So your pension fund administrator is a responsible organization that manages the fund of your employee by investing the same in secured investment under the watch of PENCOM. And to be honest, I think PENCOM has been doing a good job so far. I mean, when it comes to that investment leg, there is a lot of, strict regulations for these companies in terms of the kind of investments they can do, what percentage of their total fund asset under management they can put into what. I think PENCOM has really tried in that regard. And then you have your pension fund custodian. So a lot of the custodians actually, they are the ones that own a number of these PFAs. And so these are the banks that receive and keep the contribution. So you have your Zenith pension, which is a PFA, and you have your Zenith Bank as a PFC. You have your Stanbic IPTC pension as a PFA. You have your Stanbic IPTC Bank as a PFC. A number of them, you have your FCMB who has bought over legacy pensions and the likes. Okay. So I'll end on this note. Interestingly, before my battery goes off. So payroll is a combination of numbers and critical thinking. This was basically to be an introduction into payroll, your PITA, and then your pension. And like you've seen, it's just series one. This is just the entry. This is just to introduce you to some of these things. And like I said, for some of us, it's a refresher's course. So on this note, I would like to say thank you for listening. I hope I made a bit of sense.
All right, thank you very, very much, Tunde, for that. That was profound and quite elaborate. Hello, please. Who is speaking, please? Please mute your microphone when you are not talking, please. So as I was trying to say, that was a profound and elaborate. And not just that, I want to say he's quite sacrificial. And how do I mean by that? He's caught up in traffic as I speak. Please kindly mute your microphone. So, and he had to actually pull over on the road instead for him to get to his house and to actually ensure that he delivered this. So that's why I say it's quite sacrificial. If you have a question, kindly raise your hand and I'll call on you before you can mute your microphone. I've seen some hand, but before that, I have some few questions that I picked up from the so I just want to actually read them. The first one person said, on probation, what happens when your organization is not affiliated to ILO and a staff joins the organization on the 16th day of the month? So, Tunde, did you get that question? That's for you.
Yeah, I did. So let me. This is like somebody saying what happens. Can you hear me, please?
Yes, please. I can hear you. Yes, I can hear you.
I can hit the road. So it's like somebody saying what happens if my staff handbook does not make provision for maternity leave. we all know that the labor law supersedes every other contract of engagement or employment. So organizations don't have to be members of ILO. It is countries. So the moment your country is part of it, is part of the treaty to the International Labor Organization Convention, then it's bound. It's the same way the labor law bounds on all. It's mandatory.
All right, thank you very much. There's another one here from Faith Ajayi. He said she, I guess it's a she or he. So for the purpose of determining the appropriate tax, so how should consolidated relief allowance be applied on leave allowance and 13th month? Did you get the question, Sunday?
Sorry, can you go over that again?
I said for the purpose of determining the appropriate tax, how should CRA be applied on leave allowance and 13th month?
Okay, so on your leave allowance and 13th month, it depends on how your payroll runs, right? As long as you're going to calculate tax. So if you do it like a supplemental payroll, for example, like I tried to explain, so your 13th month and your leave allowance, you're still going to subject them to normal tax. And so the same process where you have to do, so you know your CRA formula of 1% of gross income or 200,000 is actually an annual formula. So you need to, what's it called? When you say annualize, that means to put it in monthly basis, right? Or does it mean to make it, I think it's, yeah, you need to then get your CRA calculated still, because whatever your leave allowance comes to on your 13th month is still the gross pay and it's taxable. And so you need to still treat it using applying your consolidated allowance on whatever your total 13th month or your total leave allowance comes to, treating that amount as a gross sum. Because the whole idea is that it's supposed to reduce your tax liability on that amount.
Okay, all right, thank you very much. If I can also lend a voice to that, what it's trying to say invariably, Faith, is that let's assume you are using an Excel to run your payroll assumption. Now, you know, everything in Excel, I expect that you must have actually most part of, maybe most month of the year is very possible is blank because there's nothing there. You have all the basic, all those one, but that, please, can you hear me, please? Please, can you hear me?
Yes, sir.
We can hear you.
Just want to confirm you can hear me. So just create a column for others, which most part of the year, it might be empty. But when a staff asks, or maybe you have a column for leave allowance, a column for others. Now, most part of the year, when the guy is not going on leave, that column is blank. So the moment that month is going on leave and you want to get his leave allowance, you put it in there. So because you have run a formula into the Excel, it will just run it and get the whatever the CRA is. So it's a function of, like, you know, when it started, it made mention that you must have some basic Excel knowledge if you are using it. And if you are using a software, it's very, I'm so sure the backend will factor all this into it. So that's just two, and the same goes for with 13th month. So that's just my addition to that. So I want to give the first person that listen is Chima. Please, Chima, you have the floor, but kindly be as brief as possible. Thank you.
All right. Thank you so much, Mr. Williams. Thank you for the presentation, Mr. Lagunju. I didn't want to jump in during the session. I don't know. Can you hear me?
Yes, clearly.
Yeah, I don't want to jump in during this session, but I just want to clarify something. We made mention that below an annual, say, gross below 300K is tax exempt, but must be filed during the annual tax return. So I just wanted to throw more light. Is it that we'll capture it, or so what when you say must be filed during the tax return? So what do you actually mean? I want us to just throw more light on that. Thank you.
Okay, thank you very much, Chima.
All right, go ahead.
So the same way for corporate organizations where you do what you call null returns. What a tax body wants to do is, even if you did not make profit in that year, right? Please write your 0,000 naira file. We need your record. We need to be able to track on a yearly basis how, and so you have, like, I think there's a 3-year window for corporates, for newly registered corporates, to actually do your null returns. So the same way, if you have employees that are tax exempt, I mean, you will put their figures there, how much they are earning. And when you say you did not pay tax for them, the tax agency already knows that this person is in that bandwidth of tax exemption. So the reason you have not paid tax for them is because they are tax exempt, but it does not mean they are not paying salary. So the tax body still wants to know your true head count, irrespective of how many people you actually paid salary for. And if you're not paying salary for someone, why did you pay salary for them? Because at the end of the day, even these guys that are tax exempt, they are still going to have tax cards, right? They are still supposed to have their own tax cards as residents of Lagos State, and so they are not denied whatever privileges goes with having a tax ID, whatever things you can do with it, and all of that. So it's just, if you don't have them, if you don't file returns for them, there is no way their record is going to be with the Lagos State Inland Revenue Service, using Lagos as an example. So it's basically for that purpose, and then for them to know why you have 82 employees, but you pay tax for 80 employees. I don't know if that answered your question, Chairman.
Yeah, it did. It did. Thank you so much.
All right, thank you. Thank you
And
very
then you
much.
can check what you don't need just on the platform. So yeah,
Yes.
I mean on the chat board.
Yeah, but I also want to add this. If you want to take it as an advice from me, it's good that we learn this process as HR professional. But if you ask me, filing for tax is not an HR function. So if as much as possible you can prevent it so that you limit your issues, I would say leave it to, is it finance or accounts? Let them handle their stuff. Yours is to prepare. If in some cases, if in some organizations, maybe finance might even actually, but they are to pay. You are to just ensure that the records are intact by ensuring, okay, what needs to go into payroll are accurate. Okay, so that's just my advice. Thank you. Only want to see, please, you have the floor.
Okay, good evening, everyone. Thank you very much, Mr. Olavision. Okay, so my question is, can you hear me, please?
Yes, but it appears there's a noise in the background.
Yes, it's a generator noise. So. Can you hear me now?
Yes, yes,
is it better?
It's better.
Okay, all right. So my question is, how do we address this kind of situation? A payroll that is being subjected to tax and pension deduction. You know, there is this split of 60-40 on a gross pay. But then, you know, BHT is supposed to be taxed. But I realized on the payroll that the 100% of the gross pay is being taxed, aside pension. I don't know if you understand what I'm trying to say.
Please come again.
Okay. All right. So at my new place of work, I noticed that it's not just the BHT that is being taxed. Right? It is the 100% gross pay that is being taxed and pensioned. Do you understand?
Yes,
in such situation, what do you advise? What do you advise that to address that?
Okay, let me speak to that. Even though the facilitator will still address it. Please point out correction. If you recall what was typed in the chat, said all income is taxed. Hello. Can you hear me? Hello, Oluwatosin. Is she still on, or am I the one out? Hello, Oluwatosin, are you there?
Yes, I'm here.
Okay, so I said just a correction from what you just said. When it comes to taxation, it's not BHT. The gross is supposed to be taxed. That's just one thing you need to bear in mind. So it's not BHT. All income is taxable. So you need to be mindful of that. And then when it's the pension aspect, is the pension that is actually treated with basic housing and transport. Okay. And so I see something that is erroneous in what you said. That's why I'm laying that to bear. So I don't know why they actually want to speak to that. But having said that, I've actually worked somewhere that for the purpose of pension, they were not using BHT, they were using the 100%. So it means they were magnanimous in paying me more than they should have paid me. So I aligned. So I was paying more, and it helped me to actually, I was able to grow my pension then. So I wouldn't know, you might have a different philosophy to that, but because I'm not the one calling the session, let me hand over to Tunde to speak to that. Thank you.
Okay, thank you very much, Larry. Yeah. So Tosin, again, like Larry already said, all your gross pay is taxable. However, for the purpose of tax relief, right? We have things that you have your consolidated relief allowance, you have your pension, you have your NHIA if you contribute, you have your health insurance premium, you have your, what else again? Your pension, that's the employee contribution. All these amounts that has been deducted from your gross pay, and then you have your NHF too, they form what we call your relief items. So when you add them together, it becomes your total relief. So you deduct your total relief from gross pay, which now gives you what we call taxable income. So it is on your taxable income that tax is now calculated. So to be a bit more practical, I'm giving you 10 oranges, right? That's what I promised you for working. Now, at the end of the month, I've told you that, see, I'm going to be collecting tax on all these oranges I'm giving you to see. But I now said, well, so that you don't get too much burden. So instead of telling you to pay 10% tax on 10 oranges, which is 1, I will give you relief on 5. You don't need to pay tax on 5, right? Pay tax on the remaining 5. So instead of you paying tax of 1 full orange as 10% of 10 oranges, you are now paying 10% on 5 oranges. But in the real sense, what you got from me as wages is 10 oranges. So that's the concept of taxable income and non-taxable income. So your relief items are your non-taxable income. I don't know if you understand that, if that's clearer.
Yes, I do.
Okay, so there's a question here, and the person wants to remain anonymous. Let me just read. So my organization doesn't remit pension monthly. They do so in lump sum the next month after an employee exits the organization. I've tried everything possible to correct the anomaly, but to no avail. Kindly advise how else to go about it. Thank you.
Number one is your organization is in breach of the provisions of the Pension Reform Act. The law makes provision for monthly remittance, right? And based on the provisions that, of course, you're doing a monthly periodic pay, or you're paying salary on a monthly basis, whatever the case is. And now, part of what you need to understand is the organization is robbing employees of the time value of money. So if I am supposed to have accrued, let's say, the 1 million naira in my pension fund account within the space of the last 12 months, and then by the 15th month of being an employee, I decide to leave. Now you're now paying that 1 million at the end of the 15th month. The profit I should have incurred from the investment from my PFA for 12 months, I have lost it. So somebody else whose remittance is being made has probably made a 15% gain by virtue of investment of the PFA.
It always give you money ahead. So pump the water. So in case whoever won't bring the money.
Who is that? Chika, mute your microphone. Who is that?
So sorry. So it means that at the end of a one calendar year, whilst the person who the organization is remitting as a when due is probably having a 1,150,000, I will be having a 1 million error. So that's already a loss. So to every side you want to view it, both legally and then even from a moral standpoint, they cheat on the employee from the employer. And so at the best, I don't know, you just need to continue to speak to the business owners to look at the site from where you're coming from. And hopefully, I don't know, they will listen. And if not, they suggest to use
Let me, can I just come in at that point, please? What I know you can do,
Okay, this WhatsApp group.
what I know you can do is this.
We don't.
Hello, Chika.
John,
you are muting, I will exit you. Sorry, apologies for that. So what you can do is, you can actually approach PENCOM, and I know when they want to address the anonymous. Now, all they need to do, they want to see a copy of your employment letter to show that you're actually a staff in that organization. They will need copy maybe 2 months or 3 months pay slip to show that you are still in employment up to the last month. You are notifying them. Leave the rest to them. They will take care of it without you being mentioned. That's what you can do. I'm aware of that. Thank you.
Sorry, Larry. I think this person is asking as the HR of that organization. So
yes, I agree. No. I agree. And even though it's an HR, let me explain. Let me just explain. One, the person is an employee in that organization, right? I have done that before. Are you getting me? Because I'm also an employee. And when the ships are down, if anyone calls out the organization and they will say, who is the HR? So what you are trying to save, at the end of the day, it will still come back to you. So it's not about being brutal to the organization. It's a function of doing the right thing. So when you present yourself as an employee that this is happening, just lodge it. You will see they will take action. Because if you have spoken to your employer, now the issue here is not about maybe ability to pay. It's not that they can't pay. So I wouldn't know. Let me see. I don't know. So I want to believe that's answer.
Yeah, Larry, I subscribe to doing what is right. I subscribe to, doing things right and doing what is right. But I would also suggest that let that be a last resort after you have done everything to, have honest conversations and get no bold.
Okay, maybe I didn't read to the last thing that the person wrote. Let me read it. Now, he said, he or she said, he said same as tax. The MD is the alpha and omega. HR does not have any say. He decides what he wants to do, what wants to be done. So it appears that this particular employer, this is the only route that can make him or her to actually change.
Okay. So as a last resort, obviously, that's fine.
Okay, someone asked again, say for the rotation, according to ILO convention, does this mean salary? Sorry, a lot of things are up. Sorry. Does this mean salary is prorated? Salary should be prorated irrespective of the date the employee leaves join the organization. Interesting question. Did you get that, Sunday?
Sir, your line is breaking.
Yes, I did. Can you hear me? I did.
Yes,
so
okay,
sadly, so that's the truth. So their recent NIC, maybe not recent, but of course their NIC president in recent times that we all probably have been training on social media. And the argument of the court is that, yeah, beyond the fact that this is an ILO provision, if you say they are periodic employee, it means that you pay them on a monthly basis. So whether the person is leaving on the first or on the second, your agreement with them is on monthly basis. So you should pay them their full pay for whatever period they're leaving the organization. And of course, I'm even you can argue to say, oh, but what's the rationale? But interestingly, you realize that and it's a position in law. So the law naturally believes in defending the one that is weak in any contractual agreement. And so that's why a lot of times, for some of us, if you're being honest with yourself, you realize that the NIC proves to be a bit more suited towards employees. You would do a lot as employer to, to win cases with NIC against an employee. You have to have, cross all your T's and dot your I's. So that's sadly so. That's the reality.
All right, thank you very much. Yes, Fritz, you are very correct. That NI judgment is regarding when you terminate an employee, when you terminate at maybe any time before the end of the month, because the employee is not the one that says he or she can't work till the end of the month. So that judgment says you must pay as per the period, if it's monthly, based on what Mr. Olagunji just said. So I wouldn't know whether there is any question I didn't cover in the chat. Is there any? I forgot to mention, if you please kindly submit your attendance. The link is on the chat. If you want to show that you have attended this class, the link is there, and I'm posting it again for all of us so that we can show that. Okay.
Sorry, let me just quickly say something to what Faith. Yeah, Faith, you're right. So if an employee resigns on the 15th of January and it gives a 2-month notice period, the 2 months lapse on the 14th of March. And so whatever you're paying that employee, because in January you have paid them a full salary. So their 2 months is going to be 15th of the March of their exit. So which is still a complete salary. Not technically to say they are leaving 15th and then you are paying them 30th of a particular month. Yeah. So just to further say that, yeah, you're correct.
I thank you very much. Okay. Chima, Emeka.
Okay. All right. Good evening.
Good evening.
Yeah, I just want to quickly ask this because some persons have asked me, and I just want to thank God this is a forum for it. It goes this way. This is let's say an employee that is being is paid, let's say 50,000, and he leaves an organization which is supposed to give a 1-month notice, and because he left, he's supposed to give a 30 days and he didn't give. So let's say at the 10th day to the end of the month, he gives his notice. So definitely 20 days will be deducted from his salary as the policy stipulates. So now, what my question is this: with these deductions, both the tax and everything, will it be made to everything before they cannot pay him his remaining 10 days, which net will be included? Or will they first take away the deduction before they will not? The remaining one is when where the tax and everything will be made. I don't know if you understand the question.
Sorry,
I don't know if your question is.
Okay, if an employee that is earning, for example, 50,000, or let me just say no matter the amount, but he's leaving an organization that he's supposed to give a 30 days notice. But on the 20th day, he now gives the notice that he's only going to spend 10 more days to go. So he's going to pay for the 20 days in lieu that he didn't give the organization, and he just left at the end of that month. So now, after the company has deducted his 20 days because he didn't give the notice for it. So is it before that deduction that the tax and everything will be done, every other deduction, or after they've taken away the deduction? So I want to get where with that deduction so that they will know how much they're going to pay him finally as his payoff. Don't know if you got it.
Yeah, I got it. Let me just move while we also listen to other people.
Okay.
So he worked for a full month, right?
Yes.
He's owing the organization in lieu of notice.
Yes.
Government does not care what he owes. The same way if he owes somebody by the roadside 10 naira, government will still charge tax on everything he earned. So whatever in lieu of notice he eventually owes the organization, I would believe, would be calculated on his net pay.
Okay. Okay. All right. Okay.
Because he worked for a full month, right? But he holds the organization in lieu. That's why for some organization, you will even be required to go and pay to the company whatever in lieu of notice before your due date of exit, because it forms part of your clearance.
Okay, so where my question comes in now is that the government aspect, will they tax the whole money? Let's say it's 50,000 that the guy is supposed to.
They are taxing his gross pay. They're taxing his gross pay. He's working for the full month. The only thing is that he's in breach of a contract. That he was supposed to give 2 months notice, is giving 1 month notice. So he could as well have gone to the bank to pay his in lieu of notice into the company's account and still got his normal salary.
Okay.
Yeah.
Okay.
All right, thank you very much. That's spot on. Sorry, IG, I'll come to you. Faith, quickly, please.
Thank you very much, Larry and Lagoju. All right, so this is Yemi talking. All right, I'm using Faith's phone. All right,
okay,
so
this is an unknown name.
it's all right. So just to put some clarification to these, the question that is asking, so there are 2 scenarios to that. One scenario is if somebody resigns, if somebody's supposed to give 1 month in notice and the person resigns, say on the 15th of the month, which is before the end of the month. The first thing the person needs to do is to pay in lieu of notice. That is the first step. And then when it's time for payment of salary, because you're supposed to get, ordinarily by best practice, you should get your final check on your last working day after you have concluded all exit procedures and processes and submitted all company properties. And it will follow the normal way things should be done. You pay in lieu of the notice before your final day. But when the company is calculating, doing payroll at the end of the month, your payment is made on your last day of work when you have done your clearance, and your payment is made up till the last day. Your salary is paid up to that day. In the case of exit that is, initiated by the employee. However, if the person, waited until the 30th of the month, and let's assume that the company pays salaries on the 30th of the month. If the company is not aware that you are resigning and you have not given any notice, you just collected your salary, and after salary has been paid, then you then say, I'm leaving, I'm not coming back again, which of course, you are meant to pay the entire money back in lieu of your notice. That is 1 month back in lieu of your notice, or 2 weeks or 3 months, depending on the terms and condition of your contract of employment. So that is how that ordinarily works. Now, just to also give some context again to the initial conversation around paying full salary or prorated salary in the case of exit, where the exit is triggered by the employee, the terms and condition of employment is adhered to in terms of what salary should be paid. That is, if the employee is the one resigning from the organization, If you resign before the full 30 days or 25 days, depending on 22 working days, depending on what the company is applying, because some companies applies 30 months, 20 days a month. Some apply 22 working days, depending on what you are applying. Then in that case, the company will prorate whatever is payable in terms of salaries. However, where exit, the judgment of the NICN and the position of the LIO on this is that where the exit is triggered by the organization, under whatever circumstances, whether as a result of termination, by way of service not being required, with or without reason, or by way of redundancy, or by way of a disciplinary process, as the case may be, or voluntary determination of employment. In such a situation, the law and the principle of equity and fairness prescribes that that person already anticipated that it's going to get the full pay at the end of that month. So that is the basis of the principle behind that judgment, that you will have to pay the full month's salary irrespective of the period of termination within the month. But when it comes to the exit that is triggered by the employee, of course, proration comes to play, because you cannot earn and you cannot receive what you have not earned. So that's also the principle of equity and fairness and natural course of justice. Thank you.
All right, thank you very much. Before I allow IG to talk, I saw one question asked by Adelunke Bankole. I think if you listen to the last speaker, the last comment now, you've seen that that has been taken care of, because that actually is meant to protect an employee when an employer triggers exit. So that's just it. So the case you mentioned about, it does not apply. There is no way an employee resigns on the 15th of this month, and on the 15th of next month, so that's when his 1 month expire, and he expects to get full salary for that next month. It won't happen. So IG, please. Thank you.
Okay. Good evening, everyone. I think I have to come back to one critical issue that has not been addressed. Now, this issue has to do with, in terms of proration and all that. The industrial court judgment is on proration at the point of exit. You don't, because somebody in the course of the presentation said, okay, what if somebody resumes maybe on the 15th? Obviously, once somebody resumes work, or you don't expect to earn full salary for that month, you have to be prorated. You have to be prorated. So the proration that we are talking about, that the industrial court lay credence to, is at the point of exit, not at the point of entry. I think I should put more context to that. Thank you.
Thank you very much, IG. That's also validates what I just spoke about. So it's about when at the point of exit, and much more when an employer triggers it. So that's, having said that, that's it. Emily Tochukwu said, in the event of the company's downsizing, what are the legal benefits of the affected staff? When you say affected staff, in what regards? Are these benefits different from what the staff is entitled to in the case the company is winding up completely due to force majeure? Well, for me, okay, maybe you leave it to, so don't let them take the position of the speaker. So I don't know whether you got that. This person is asking, say, in the event of the company's downsizing, what are the legal benefits of the affected staff? Are their benefits different from what the staff is entitled to in case the company is winding up completely due to force majeure? Sorry, are you there? Okay. For me, okay, IG just wrote, he said redundancy clause. So what do you have in your policy? Chima, you have spoken, sorry, you have spoken. What do you have in your own policy as an organization regarding a situation like this? If not, then vis-a-vis, what's the position of the labor law? You know, when it started, he made mention of when pension was started, immediately with this pension was enacted in 2004, which was also amended in 2014. The issue of gratuity became non-compulsory, even though some organizations still do that. But that's a function of internal policy for the organization. So I wouldn't know if there's a ground for this as far as the employer is actually doing pension. So I don't know whether some people want to help me with that. Thank you. Do you want to say something to that? Hello, IG, are you there? Okay. My fellows, are you there? Do you want
Yes,
to
I'm
speak to
here.
that? Yes,
Yes,
can you
I'm here.
please?
Okay, so in the case of redundancy, all right, like you have rightly said, there are three things that could apply. One is the principle of equity, fairness, and of course, natural justice. And in line with the labor law, usually the principle is usually around 3 months salary for redundancy. However, where you have a union, where you are working in a unionized environment, when a company is discussing a redundancy, you must first negotiate through the negotiation process and the machinery of industrial relations process. You must negotiate and discuss with the union to agree on what the redundancy payout would be like. Now, even if you have a policy around it, your policy must, of course, respect the principle of dialogue with the labor union on matters of redundancy. So it is based on what you have agreed with labor unions that will that determine what is paid out, in addition to the salary, the last payout salary for the specific period when that redundancy takes effect. Now, where you do not have a union environment, where you are not working in a unionized environment, it's also expected that you could have what you call the Employee Consultative Council, or what you call the JJC, the Joint Negotiation Council, or you discuss with the individual employee to also agree. However, where you have a policy already on redundancy, then you can trigger your policy. But most of the time, what most companies do generally that
So can you kindly unmute? I think
okay,
some people
sorry.
are.
Can you hear me now? Can you hear me now?
Yes.
All right. Okay, I don't know where you lost me. However, I'll just quickly round up on my last point, which I said that if you are in a unionized environment, best practice is ahead of the redundancy. Even while you start the conversation, you must sit down with the unions to agree on the redundancy payout and also the process of redundancy, whether you are doing last in, first out, or first in, first out, or whatever it is that you're going to treat. You must sit down with the union and discuss and agree. That is the position of the law around that. But where you are not unionized, I don't have unions in the system. If you have representatives of the employees, you need to have a conversation with them. Some companies have JCC, some have Employee Representative Council and all of that, apart from unions and all of that. So you must sit down with them to discuss with them. But where all of that is not in place, then if you have a policy, that policy is not something that you want to develop at the point where you want to now have the redundancy. No, it must have been in place prior to then. Employees must have read and must have signed up on that policy ahead at the point of their entry or at the point when that has been done before the period, not when you want to do the redundancy, because that will mean that you are changing the rule in the middle of a game. But the best practice is to actually have a conversation with employees that will be affected and have a negotiation and agree so that everybody can live, can have a win-win situation ahead of it. Usually practices is usually around 3 months salary in addition to the final salaries of the employee. And in some instances, some organizations can also give what we call sweetener or F gratis in addition to that, just to make sure that at least you are disengaging on a good note. So those are the general practices around redundancy. Thank you.
All right, thank you very much for that. That's so profound. Like I mentioned earlier, if you you can fill the attendance register. I want to believe that we've attended to all the questions on the call today. I want to appreciate everyone for your time and your presence today. Like I said, when we started, I said this is a series. I want to implore you to watch out because there is a couple of them coming up. There's one that's coming up on industrial trust, ITF. That's also another ball game entirely, what it entails. So watch out for it. And there's also another one that will be on expatriate management. I want us to actually watch out for it because all these are for setups for us. But in the interim, we have a program coming up on 20th of May that I actually want to quickly advertise here, as it were. And it's a special leadership development session. It's titled Values, Critical and Cause for Authentic and Impactful Leadership. So there's a tendency that you've seen the flyer around. It's something that I don't want you to miss for anything because it's going to be hot as usual. So these are the other ones that are coming. So once again, I want to appreciate everyone for your time, for your commitment to AHRP. Without you being there, we can't be here saying we want to give this out to you. So thank you very much for your time. God bless you and do enjoy the rest of the weekend. Bye for now.